All right, let me go ahead and get screen share going as well for you guys. We're going to be going over charts just a little bit as well. All right, so don't forget this will be geared specifically more towards those that have at least a little experience in the market. They understand what calls, puts, the terminologies. Maybe they're struggling with strategy, taking profits, finding entries, understanding the news, or interpreting the news as well. All right. My name is Niiko the phone guy. Some call me Unc, Grand Master Unc. I've been trading for quite some time. I started with crypto. Crypto started from like 2014 and options about like 2019. I've been teaching since 2020. So as soon as I really understand and got a full understanding of the market, everyone around me, I kind of started showing, made group chats, started with iMessage, and it's grown to Discord, at least 800 plus people. I love trading, understanding the market. In order for you to really continue to strive to be better in trading, you got to actually want to love trading. You got to understand the process, love the process, and don't hesitate to ask questions. Don't hesitate to get a better understanding or even strategy or something new in the market. With trading, it does take time. I'm going to say this from now to make sure everyone knows this. This is not a get rich quick scheme. This is not a let me just start trading and in 2 days I'm going to be trading like a pro. It's going to take time, right? This is me being honest. I'm going to be honest for these next 3 days, as honest as possible, right? You're going to learn about yourself when it comes to trading that you didn't think you did, that you knew, how patient you are, how greedy you are. So if you want to be good at trading, you really want to adjust to what you need to, right? No strategy or style is going to be perfect. So those that teach and show online, no strategy is going to be perfect for just everyone. Everyone's going to have their different risks, their different take profits, and what they see in the market. For me, I love how you can interpret the market differently and still all make money. So I trade based off of news. I prefer to understand what's going on in the market. That's really the market that we're in now. So let's say if the market is going up because Trump is talking, or the market's going down because Powell's not raising rates, right? So the market will move according to what news is occurring. Right now, we have so many things that move the market. It's crazy. In one day, you can see the market go up, down because of 5 different things that occur. So you want to be able to adjust and understand how to trade, right? Understand how to work the market. There's one thing where you understand how a stock moves, but another thing is understanding how options actually move. So you can understand how to chart, how to look to see if a stock is going to go up, but actually trading the actual stock itself, the instrument, stock options, they're 2 different things. So if a stock is going up, if I trade an options contract, yes, I can make money for going up if I'm in calls, right? But if I choose the wrong strike price, then right away I'm already setting myself for failure, right? So when it comes to first starting out, I don't recommend to choose those 0 DTEs. I know we love them, but trading a contract that expires the same day, and then you do the same thing over and over, trying to chase, saying, damn, let me try and make up for the losses day in and day out. It's just, and then having to fund your portfolio again and again. It gets to a point where you got to change it, right? You want to give yourself time. If you're trying to build your portfolio, don't treat this like a casino. I know it's easy to treat it like a casino because you see someone up 500%, someone posts up 1,000%, They turn $35 into $8,000 or $5,000. And it's easy to treat the market like a casino, right? The contract expires today. By 4 o'clock, maybe I can turn 5 into 500. We've seen it. Those that have been trading, we've seen crazy things that have occurred in the market, but don't expect it every day, right? So you can't trade like it is a casino every single day. You have to trade it like it's a genuine business, like you really own a business. Most people nowadays, they work, let's say, a 9 to 5, and then have a business that they're trying to run or running, right? You have to treat trading like a business. And what I mean, managing your money correctly, accordingly. You don't want to just keep feeding money into the market over and over, rinse and repeating, doing the same thing over and over. So what do we need to do? Work on strategy, the psychology of trading, to understand what is going on. Everyone on here, go ahead and do me one favor. If you already have a trading journal on Zoom, go ahead and type in journal. If you already have a trading journal, so that means you have a book where you write anything that is related to stocks, trading, your trades that you take each day, if it's whatever it is, wins, loss, the contracts you jumped into. If you don't have one, just say, I don't have one. So that means I should be able to see what 37 responses of either journal or I don't have one. Please, let's all work with me, please, so we can make it go through quick, so I can go right back into lessons. Fly through them. Either you don't have one, or you have a journal. I don't have one, or I got a journal. Just simple. I'll tell you why this is important, but very simple. And again, those that are brand new again to trading, please go ahead and send me a IG message saying I'm new to trading. But everyone right now on Zoom, go ahead, if you have a journal, go ahead and type in journal, or I don't have one if you do not have a journal. Let's fly through them. I think I got most or all of them already. If I'm going too fast, say something. Please speak up. I don't mind. No child left behind. For me, it's really making sure that you guys understand it and genuinely making sure you can apply yourself with information. All right. I don't want you to have to depend on someone for signals or looking for trades. This is something you can pass down to family, friends, your lost cousin that you haven't seen in years or months, whoever it is. Is that everyone? Either journal trading, I got a lot of journals and quite a few I don't have ones. Everyone that put I don't have one, I need you to get one ASAP. I need you to get it. Right now it's back to school. The school shopping is perfect, right? What is it? Tax-free was last weekend. So you still can get a cost-effective journal that you can start writing into. I don't recommend you using your phone. The reason why, it's easy for you to get distracted. You get a notification here on IG, on this, somebody texts you, somebody FaceTime call you. So have something separate so that you can stay focused when you're actually studying and looking over things, all right? Everyone can hear me? Let me make sure y'all can hear me. Let me make sure I'm not talking to a wall. Y'all still with me?
I can hear you. Yeah.
Everybody else, let me know y'all still here.
Yeah.
Yes, I hear you.
Yes, we can hear you.
All right, perfect. All right. Any questions right now, guys? So everyone knows if they either don't have one now, they need to get a journal. And those that have a journal, use your journal. Don't just have a journal just to have a journal. Actually use it each day. If you look at the market, use it. Yeah, I hate it. Yeah, I do hate that air. So please, if I just ask a question, please make sure I know you still here, even if you have to leave it off mute so you can breathe on the mic, whatever it is. All right, so if you have a journal, make sure you're using it, right? It doesn't make sense having it and you don't use it. The reason that you should have a journal, each and every single one of you, there's 39 of you on here. Each and every one of you should have a journal and use it. Now, as you're going through your journey of trading and learning and understanding the market, it's going to be an endless journey. I'm going to say that, right? What do I mean an endless journey? For me, I'm still learning new things that can make me better as a trader, that I can show others, yo, this works better. Yo, instead of losing money on this, you could try this instead, right? Or finding new stocks or new opportunities to be able to make money. So it's still going to be an endless journey and new things that you'll experience as you trade. But as you're going through and learning this journey, have it written down so that you can reference whatever it is. So for me, I didn't have the watch list, the Robinhood watch list, and different things that is much easier for you to be able to understand what's going on. So I just took screenshots, put it in my notepad, and then wrote down whatever it was. All right, because of this, I jumped in and I'll write down the news on whatever it is. I'll write down where the price is. I'll write down my thought process on why I got into the trade, right? Does everyone already use their journal now, or we got them and we don't know what to put into the journals? That's a question.
Yes.
The journal is going to be meant for you to be able to go back and see what went right and what went wrong. How do you do that? How will you know what you got to look at, right? The contract that you chose, when you bought it, what occurred on the stock itself during that time when you were in the contract, what happened after? Did it continue to go? Did it reverse, right? If you work during the market, depending on how you can look at the market, it's going to be easier for you to choose longer dated contracts. Now, that doesn't mean you can't sell the same day or you can't sell the next day, right? But it just gives you more time and opportunity if the trade doesn't work in your favor, or let's say if the first day it didn't work out and you didn't see that there was an opportunity for you to sell, you still have time, right? Versus you buy something that expires the next day and you got interrupted on a call and now you lost everything on the trade. So just giving yourself time will allow you to still make money. But in case that trade doesn't work out that day or right away, you still have time, all right? On the journal, make sure that you're including, of course, whatever stock it is, the contract that you're choosing, if you made money or lost money, and what strategy you were going over. Was it yours? Was it someone else? Right? Each trade that you go into, you have to treat it as an individual. What do I mean? My last trade shouldn't have me holding on to this trade longer, my new trade, right? So if I missed out on profits on my last trade, that doesn't mean hold on to this one even longer. So make sure you're trading each contract that you choose, each stock, as individuals, right? So we all have a journal, right? Or we're gonna get one. We got that on our list, right? Now, I recommend you have maybe 1 to 2 stocks that you know how they're moving, where they are on the day, up, down, whatever it is. Pre-market, you know where it is. During the market, after market, you know what the stock is doing. You know how the news reacts to it. You know what is going on, right? The reason why, you'll understand how to trade the stock. You can rinse and repeat and do the same setup or strategy over and over. Can anyone tell me what my favorite stock is? Well, it's two, but let's see if anyone knows.
Tesla.
Tesla and this MSTR one or MVGO.
There you go. There you go. Yes. So Tesla, I know when it's going up. Some news comes out, I know when the news is what's going on with the news, right? If I'm trading the same stock over and over, I'm understanding the movement. If it's on a downtrend, if it's on an uptrend, when their delivery numbers are, when their earnings are, right? So understanding the same stock makes it easier so that each day I can understand how to trade it, where opportunities are, why it will go up, why it will go down over and over. So if you're choosing a whole bunch of different stocks each and every day, trading will be difficult. Why? Until you actually start to understand one, you can't just trade all of them. You won't understand the personality of the stock. Each stock has, I call it a personality, right? It's up one day, down the other day, right? The next day. So as they move, they're going to move different. There can be news on NVIDIA that comes out, the stock is flying up. That same news can affect AMD or ARM, right? Or other semiconductors. But it doesn't mean that because NVIDIA goes up $10, $20, that AMD or ARM or the others are going to move up $10, $20, right? So it's just depending on what kind of news that we get as well. Maybe if it's news that is specific to semiconductors as a whole, then yes, then we have sector rotation. Does everyone understand what sector rotation is? Say yes or no in the chat on Zoom.
No, connect
Sector rotation, talk to me. No, I don't know what sector rotation is. Yes or no, yes or no.
Nope.
What was the question?
What is sector rotation? Sector rotation, section rotation, I guess, sector rotation. The different sectors in the market. Ooh, I love my job. Ooh, I love my job. A lot of no's. A lot of no's. I see you, Ben 10. All right, so I want you to listen very carefully when it comes to sector rotation. What is that, right? Sector rotation is where in the market, you will see a specific sector, or a few sectors that are going up. Oh, side note, for me as a trader, I love calls. Everyone that trades with me, around me, that knows me, I love calls. I like when stocks are going up. I hate buying puts. I buy puts to hedge. So I'm always looking for stocks to go up. Breakouts. Everyone else, I know y'all love y'all puts, but I love my calls, right? So just understanding what makes the market go up. And I always point to look and see what sector is moving up. So sector rotation is where, let's say if some news comes out related to NVIDIA. That's our example, right? You'll notice normally when NVIDIA is going up, what's normally happening, right? The other semiconductors are moving up as well. There's an ETF specifically for the semiconductors. There's an ETF for, which is the chips basically, right? You either call them chips, semiconductors. There's an ETF. There's many different ETFs, right? Oh, thank you. Gotta love you. Ben 10 the GOAT. All right, so there's different sectors that she looked up perfectly. There's many sectors in the market that the market will rotate into. Banks, you know, the chips or tech, energy stocks, cannabis stocks, U.S. consumer like Walmart, Lowe's, Home Depot. There's EV, Quantum. I want everyone to write down quantum right now. Write down quantum stocks right now. Write down quantum. After you did that, write it in the Zoom for me. Quantum stocks. Please go ahead and write quantum, just so I know I did something for you later too. If you don't get nothing from these 3 days, go ahead and write down quantum for me in Zoom real quick from it, please. You'll thank me later. Y'all still with me?
Yeah.
Everyone go ahead and write quantum. Write quantum, quantum stocks, quantum, whatever, however you want to put it, quantum. This is a nice sector that you need to know why they're going up, why they went up. Quantum is going to be after AI. Even the CEOs of NVIDIA, AMD, I think it was MU or Microsoft, one of the two also, said quantum is after AI. So in investing, we're supposed to think about the things that are 5, 10 years from now, right? Quantum is after AI. So expect quantum to continue. So the way that we look at Google, it's up, Apple, it's up, NVIDIA, it's up, right? Netflix, all these companies, you can be looking at the same thing later on in years when you look at the quantum stocks. They'll be up, just saying. All right, back to sector rotation, right? So as the market's going, right, we can trade options from 9:30 to 4 p.m., right? Throughout the day, throughout the market, we rotate into different sectors. Maybe banks are going up first thing in the morning. Maybe the chips are going down first thing in the morning. Maybe the cannabis stocks are going up. Maybe the EV car companies are going up, right? So throughout the day, the market rotates. So anytime that I'm trading, I trade live, right? So anytime that I'm trading, I'm looking through to see what stocks are up in different sectors. What you need to do right now is go through to see the different sectors in the market. ChatGPT is going to be your best friend. I know quite a few of you guys already use ChatGPT. Don't use it like it's Google. Use it more than it's Google. Use it like your assistant, right? So go ahead and look to see what are the main sectors in the market, and then look and see the main 3 stocks in those sectors. Why do you need to do this? Let's say if NVIDIA is going up, AMD is probably going up, Intel's probably going up, AVGO, which is another chip, is going up, right? So if I know that the chip sector is going up, then I can capitalize from that sector being rotated into. Now, let's say I notice that NVIDIA starts going down, AVGO starts going down, AMD, ARM, they all start going down. That means market is rotating out and it's rotating into another sector. Now, mind you, there can be more than one sector that's moving up or down, right? It could be the banks are doing well. So you see Wells Fargo's up, JP Morgan, Bank of America, all are up. But then you look and see maybe the chips are down. NVIDIA's down, or ARM, AMD, etc. So as throughout the day, market rotates. So keep this in mind as the market is going, that it'll go from one sector to the next. So if you see, hey, all 3 of those stocks that are within that sector are moving up, let me go look to see how I can capitalize from that sector getting attention. In order for you to make money in options, we need movement. In order for you to make money in options, you need action. You want the stock to move. You don't want a dollar move from a stock that goes up that is at $200. We want action. We want movement. So we want reasons why the stock is going up or why it's going down. I'm sure a lot of you guys have seen United Health, crazy drops. Eli Lilly, crazy run-ups and drops, right? Why? From news, a catalyst. And what happens when that catalyst occurs? Other stocks within that same sector get affected. Eli Lilly had some news, I think it was yesterday, their news was related to their drug, right? It's not doing so well. It's been going down for a few days, actually. NVO is another stock in the same sector that is a competitor. So if one stock, because their drug is not working, is going down, the other one benefits. So that one was going up, NVO. So you can look and see, hey, Eli Lilly was going down, but this stock was benefiting, NVO. So understanding how the market interprets news and how it interprets what's going on. Is everyone still following with me? Can everybody say I'm still here?
Still here, still here.
Still here.
Where we at? I got 43 on here. Let me get it. Still here. I got 2.
Yeah.
Where we at with it?
Still here.
I'm here.
Yeah.
Is what I'm saying making sense so far, ladies and gentlemen?
Yeah.
Everyone else. I'm talking to a crowd. Yes, it is a lot. You will have a recording so you can go back over and over and over and over. This is repetition. In the market, it's kind of like a basketball player. If you want to be the best, repetition. You're the first one in the court, you're the last one out. The more time you put in, the more time that you get back. If that makes sense, right? The more experience that you have, it's about skill. If you can put skill into this, right? Learn the skill, understand it, you get back more time. If I can make $100 in 20 minutes, 5 minutes, or $1,000 in an hour, I'm getting back my time, right? With trading, it's repetition, 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 right? So everyone understands sector rotation. Ben 10 is on. I love it. Anisha is staff with TOA, and I've been with her on her journey since the beginning. Actually, let me let my dog get her little shine real quick. Can you talk right now, Anisha?
I could talk. I could talk a little bit.
Can you, if you don't mind, give a little insight or maybe just your journey or what you think are some pointers that people should know?
Sure.
I'll say one thing before she starts. She's one person that I can say has beat me in percentage gains in one trade. It was 8,000 something percent. So in one trade, 8,000 something percent.
Yeah, shout out to United Healthcare for that.
All right, go ahead. My bad.
So I started trading, I want to say a little bit before 2020. I wouldn't say it was consistently either. I kind of would pop in. I actually joined a group that was ran by another one of my friends, in which Niiko was in. And he had, to me, at the beginning, the most riskiest strategy, but it always had the highest reward. So from then on, I've always followed Niiko. I would say that it definitely took me a lot of trial and error to even become profitable. And I would say at least 3 years. And it shouldn't take that long because it is really not that difficult. Your biggest struggle is going to be the psychology. It's going to be you versus you. And that's where most of us, lose in our journey. When should I take profit? Should I sell? Should I sell? And then you watch your trades go to zero. I did it today. I'm not perfect. Like, it happens. But since then, I would say like those first 3 years, I lost like $8,000. But I can tell you that those 3 years of trading of losses, you can make that back in a month. You can make it back in a week. It's really not even that hard. You just have to trade your plan, you know, learn. Like he says, stay being a student. Always, seek the knowledge and you'll be good. I love it here and I ain't never leaving.
Thank you. And to you, Larry. So I want everyone to understand this, right? Everyone's journey is going to be different. We're trading, learning, understanding, just like in school, everyone learned different. Some are more visual, some are more need to be hands-on, some have to watch a video to understand. We got YouTube University free. This is where I started, YouTube University, watching videos to this day, still watching videos over and over. There's this one video I send to everyone. It's like by like Skyview, and it's like 4 or 5 years old. And every time I send it, I watch it. That's a lot of videos. That's a lot of times I've sent the video. So it's repetition, understanding the basics from the beginning to the point where it's muscle memory. If you want to go to the gym and get a six-pack, repetition, right? How do you get it quicker? You understand the path to make it quicker to get a six-pack. You understand how to eat. You understand what workouts to do, right? Same concept when it comes to trading. You understand what works, what doesn't work, what are the right things to do, what are the wrong things. But what do you need to do? What I recommend for everyone, learn from others so that you can understand that journey. Learn with someone else so that you can both go back and forth on ideas as you're learning and understanding, right? For me, as soon as I started understanding the market, how options move compared to stocks, I started showing everyone around me. Why? You get better as a teacher. You got to be good at what you're doing, right? You have to be able to reciprocate whatever you're doing for them to be able to apply it. You got to be able to interpret it to the point where, all right, I get it. I understand. Everyone on here should know what support is. Everyone on here should know what the resistance is. When price is getting towards the resistance, can it break? When price is getting towards support, can it fall below or bounce off and reject, right? So understanding different areas on the charts and understanding the different parts of the news and what can move the market is going to be important. It's going to be key, but that's through your journey. It's good that you're here on the Zoom and understanding the different concepts and ideas of the market now versus trial. It's easier to listen, but then when it comes to apply it, you're like, dang, what do I do? Right? I'm here to help. I promise. I'm here to help. I'm gonna try and give as much advice and when it comes to at least understanding where to find information as possible. Why? I went through the same journey trying to understand. If you look at my Discord, I got like 60 groups at one point, 70 groups that I'm trying to learn, understand when I was first starting. Why? So that if this didn't work, maybe this person explained it better, or this person explains it better. Let's say if I go through these 3 days and you're like, dang, why didn't you watch a short video and like, why didn't Niiko say it this way? Understand that everyone can maybe explain it differently where you can understand it. So don't stop here, right? Don't stop here with your learning and understanding through the journey. There's different ways that you can interpret the market and still make money. For me, since I know in order for you to make money with options, you need movement, I trade based off of news. I love news, or I love when a sector is moving, right? The crypto stocks. Throughout the day or throughout the market, I'll say, hey, the crypto stocks are moving. Hey, the China stocks are moving. That's that sector rotation, right? That's the market rotating and the attention is in that sector in the market. Maybe the China stocks had some news and they said, hey, we're trying to get stimuluses. Hey, we're going to inflow more money in the market. Now you see Alibaba's, you see Baidu, JD.com. You see how easy it is for me to also say the different stocks in one sector. You should know these by the back of your hand so that it gets to the point where, okay, let me look and see how Baba's doing. Let me see how Baidu's doing. Let me see how JD.com is doing. These are all China related stocks. If I know that whole sector is doing well, what can I do? Take advantage of what the stock is doing, what the stocks are doing. That doesn't mean choose the leader in the group. So if Alibaba is the leader in the group, that doesn't mean let me try and chase with the first one, right? The main stock. The others in the sector are going to move also. I can capitalize. A lot of traders will go into the market and they want the whole pie. They want the whole piece from the bottom all the way to the top, or the top all the way to the bottom. Your goal in trading to be successful is to get a piece. That's it, just a piece. And then get another piece, and then another piece. Those pieces add up. That's compounding. That's getting gains over and over. So let's say if you start out with $200 in your portfolio, for example, right? It takes time to continue to build. You shouldn't expect 200 to 400 the next day or the same day, right? I'm sure you've seen it. So in the mind, you're like, dang, I could probably put 200 and then maybe it doubles. I just get 100%, that's it, and then I'm out. That's not always the case, right? When you're trading, you have to trade smart. You have to set yourself up to be in the best position to be able to make money or profit in the market. Does everyone understand the just get a piece of the market, just a piece of the trade, not the whole pie? Can everybody put a piece in Zoom for me, please, in the chat? Just so that I know you understand. You just looking to get a piece of whatever run up or falling knife that the market is doing. Let me make sure y'all still here with me.
You're
Yo, just a piece, just a piece. I know you want it all, Danton. The reason I'm saying this now, right? The reason I'm making sure I say this now, it's automatic. We want to catch the very bottom all the way to the top. But a lot of traders, the reason why they may fail is because they're trying to chase that very bottom to the very top, right? Oh, it didn't go all the way to my take profit, so it's only $1 away from my take profit. Why and you're up 100%? Why you don't take your money? You're up 150%. Why you don't take your money? If you here's a saying that I've been saying over and over and over lately. If you see $100 on the ground sitting there, are you gonna pick it up? You see $200 sitting on the ground, are you gonna pick it up? $50, literally just sitting on the sidewalk. You're walking to your car, about to go to work, or go to the store, wherever it is. You see $100 sitting next to your car. Are you gonna pick it up? Of course, right? You pressed a couple buttons. You had an idea. The trade went your direction. Take your profits. That's the concept, right? You understand how the market's moving. You choose your strike price, you choose your expiration, you choose the direction, and you say, all right, I'm up. What should I do? For me, here's what I would recommend if you're struggling to take profits. This one I recommend to write in big, bold letters if you're struggling to take profits. So that means you're seeing the trade go green all the way up, right? 100%, 200%, 350, 60, whatever percent it is, right? And then you see the trade go red. Remember, we all have a journal now, right? Starting Monday, if you already trade, start using it. Market open Monday, 9:30 a.m. Eastern, start using it, right? If you see on your trades over and over, 50%, 60%, 70%, 100%. So that means if you did 10 trades and you see 50, 60, 70% at any point, take it 10 to 20% lower than where that is. What do I mean? Take your trades. If you see 60%, take 50% trades on your take profits, right? Why? So that you are conditioning yourself to take profits. There's a lot of traders that will watch a whole trade go up 500% and not take any profits. They'll see it go red, right? To condition yourself to make sure that you just take profits just in general. Take it at 40, 30, 50. Now, even if it continues going up, that's fine. I know you're gonna be like, damn, Niiko, it's still going up. I could have made 100 more percent. I could have made 200 more percent. I want you to understand something, right? We want a piece. My trading years, the amount of years I've been trading, imagine the amount of times where I said, I see prices starting to struggle to get past, let's say 150, right? It's at 149. It's struggling to get past 150. I'm taking my money if prices struggle. If I see prices running up, it went from 146 and it's running up and it made it all the way to 149. I'm taking my money. Why? What up, Bert? Price is struggling to continue. Sell into strength. Sell when this trade is working in your favor. Why? This market that we're in is a news-driven market. Trump decides he could tweet something on Truth Social. Now your trade that was $1 away from hitting where you want it to go is starting to go down or reverse. Right? So take your profits into strength. So when price is working in your favor, when you see that falling knife, let me pull up a chart. When you see a falling knife, right? You see prices falling down, dropping crazy, and you got to put. Let's use SPY, for example. The last hour was beautiful, right? Actually, is Dimples, where you at? You still on?
Yes.
Oh, this young lady caught this nice drop. Boy, I dropped the gangster tears. Because, boy, this was nice. You see this drop, right? As price, you see these big body candles? Anytime I'm on Zoom trading, I will always mention these big body candles, right? The reason why, this is when your contracts are gaining the most. These are the times when your contracts are gaining the most. These wicks are showing where price went. So that means within this 1 minute, I trade off the 1 minute. I know this might be a little crazy for some, but I trade off the 1 minute. So you see these candles right here? This wick right here, price reached there and then closed right here. Next class, we're gonna go over, I'm gonna make sure you guys know how to, actually we can go over that today. Make sure you guys know how to read candles, right? So price went all the way down here and came back and then closed. Then opened up here. Came down all the way here, a little bit below where it was before, and came back. This candle right here is where your put starts to come back in value. Then we're back on track, right? So these candles right here is when you're probably deciding, damn, should I take my money? The price is continuing. Something that I leave on my charts to help me. This is what I recommend for you guys to write down. It's a dope tool to use. Ripster's EMA Clouds. He's not paying me to tell you about this nice tool, but this is on TradingView, Ripster's EMA Clouds. You can use this as a support and a resistance. What do I mean? The clouds you can use as a resistance right here in the red. So if price doesn't break above the clouds with a full body candle, not a little peak, not a little small little candle and then goes right back down. So a full body candle, like over here, price wouldn't be reversing, right? So over here, for example, right here, we see the nice red cloud, right? Then we see price starting to ride along the clouds. Now we're above those clouds, right? We have a full candle above that clouds. Right here, we could have caught a nice run up just off of here. And price, love this 637.30. I have this line set as a support and a resistance, right? At some point, it was a resistance. It struggled to break past, and then a full candle. And that was actually a beautiful, nice run up, right? Sell into strength. So when these nice body candles are occurring is when you should be selling. Not here, when we get the small candles. Sell when we have aggression in the market. That's how we make money on options. That's the only way we make money, with these big body candles, right? That's when we see the most profits. When you see that crazy wick come out of nowhere, or some news come out of nowhere, and then a big candle occurs, that's when you see that crazy jump up on your contracts. That's when you should be taking advantage, especially if you're trading SPX, SPY, NDX, IWM. Sell into strength. Anything that has momentum, especially Tesla, right? Everyone clear?
Yes,
Yes,
sir.
no?
Yes.
Everyone else? Everyone else?
Yep.
Selling into strength. Actually, do me one favor. Go ahead and, just so I know, I'm just making sure that it's just repetitive, even if you need to write notes. In Zoom, go ahead and just type in sell into strength for me, please. I do these while I'm running like Zooms and in classes to kind of help make sure that I know you're there and I know you know what you're doing. There's a reason I say it too, because some will sell into weakness. What do I mean? When price is going into your favor, it's going up, you see big body candles, and then you start to see the small candles, and then price starts to pull back, and then your 100% trade turns into 70% off of one candle, right? Selling into a strength allows you, yes, it may continue to go. I ain't gonna lie to you, it may keep going. It may keep going after you sell, but that's fine. We wanted a piece. All right, perfect. Selling the strut. Do I make trading simple? Ladies and gentlemen, there's a genuine real question. Or is anyone confused? Please let me know. For me, it's called what? Constructive criticism, right? I don't mind if I need to change something, talk louder, re-explain something. I make sure no one gets left behind. So everyone good? Good, good.
Mm-hmm.
All right, perfect. All right, I got a question for the group, since most of you guys know how to trade, at least the basics, right? Where does a green candle start? Anyone but Ben 10 and Perp and Dimples can answer. Who else? Who else? Who else? I don't remember the others top of my head. Where does a green candle? Oh, you're probably writing it in chat. Nope. Come on, y'all. At least 35 can answer.
The bottom.
Perfect. A green
I
candle
was gonna say
opens at the
reversal.
bottom, right? A green candle opens at the bottom. This is where it starts. The candles tell a story. I want everyone to write in chat, in Zoom, price action. So as I'm going over this and how to read a candle, I want everyone to write in Zoom chat, price action. These things that I'm having you write down, I hope you're also writing in your notes as well. If you need to look further into it, that is for sure something you need to look into. But each thing, I'm having you write them down for a reason. So go ahead and write price action on Zoom for me as I'm explaining the green candle and how it is, right? So each candle, it tells a story. It tells you where price is, what the buyers and sellers are doing, who's in control. For me, I kind of thought about it as like tug of war, right? There's the red side, the green side, kind of in a sense, the puts, the calls, right? So if the candle's full green, right? At least you can change the colors and settle for your candles. So this is based on the default. So if my candles are green, it's a nice big body green candle. It's somewhat has a wick, but not too much of a wick. It has a wick though. The buyers are in control. That means there's enough buying over controlling the selling, right? So price starts at the very bottom. So when this 1 minute starts, so remember this is a 1 minute candle. Each of these are 1 minute. When this 1 minute starts, price goes up, right? Within this 1 minute, it got all the way to 636.71. I'm going to show you a little trick on TradingView. In the top left corner, it shows you when you're hovering over a candle, the open, the high, the low, and the close of the candle. Why is this important? It shows you where the candle started, where the highest point of that candle was, and where it actually closed. So you know how when you'll see a big wick, the candle wick goes all the way up here, and then the body is right here, right? So that means price started down here, went all the way to that price within that time. And then when that minute finally elapsed, it closed here. That's 636.57, right? Then the next candle opens, started here, right? Price goes up all the way to the highest point of the candle and then finally closes. So if we understand how price is, it's painting a picture, right? It's writing a story. So as our nice big body green candles continue, no wick at the bottom, we see buyers are in control. We can capitalize off this, right? Now, a doji candle, right? A doji candle is where that real tug of war comes in, where it's like no one really has control. Who's gonna win? Is it gonna go up? Is it gonna go down? Are the buyers gonna continue to take over? Are the sellers gonna take over? So this is a doji candle. So there's a wick at the top and the bottom, small body. Over here, big bodies, right? We got our big body candles over here, small body. So it's the buyers and the sellers are playing tug of war right here. These are where possible changes in direction occur. So as you're trading, as you're looking at if it's on the 1 minute, 5 minute, 15, whatever it is, we need to understand what price did within this time. So that means price has gone all the way up to the bottom of this candle and price has gone all the way to the top of this candle. What did price do? It closed around the same, just about the same price that it opened, right? So it did all this still just to go back to almost where it was. So that's tug of war. Now we're starting to get a little bigger bodies, right? Bigger bodies. And going into the close, we got a nice push. Does anyone know what made the market push towards the end? Anyone at all?
She
I
hour.
think I do.
If you want, can you
No,
post it?
I didn't. Wait, can I answer or no?
Say it again.
Can I answer or no?
Per. Yeah, you can answer it per. Had to think about that. Yes, you could.
What if I even know it? I'm gonna guess. I think it wasn't like Trump and Vladimir Putin had some news or something about that came out.
Yes, correct. So regarding agreeing to full ceasefire in exchange for Eastern Ukraine and withdrawal of Ukrainian troops from the East Donetsk region. So why is that important, right? So that's would mean less things of war, right? A ceasefire means the US doesn't need to be involved in no war or anything related to it, right? That's good. That's good for the market, right? So market continued to run up even after market. Hopefully, I ain't gonna lie. Monday we come out still green. We're at all-time highs, and we continue to break, right? So news is what will drive the market. I want you to understand that. News. So when you're in a call or a put, and then it changes direction and goes the opposite direction, it's going to be a few things. It could be news. Something new came out. So now a new reaction occurred. It could be where the investors look at it as it's on discount, it's on sale, it's dropped, right? UNH, it dropped crazy. What happened? People started buying it up. I caught a nice call on the way up. Why? News will only last for so long. What do I mean? News only lasts for so long. So boom. Everyone right here on here should have a Twitter and X. Twitter account, X account, however you want to call it. That's how you find the news the quickest. Not Yahoo Finance, not all these different apps, Market Watch, right? You'll see some news come up on there and it says 2 hours ago, an hour ago, 30 minutes ago. I need to know what happened right now. What's happening as we speak, as these candles are moving? X will be the easiest place to find. What I have, I think I'll see if it's available for everyone already. The news section, all the Twitter accounts, or if you want, just follow my Twitter account, Niiko the Chef, or Chef of the Year. Anything that I post, I always retweet. Why? Why? So that you can capitalize on the money in the market, right? So when news comes out, the market moves. News comes out, market moves. If we know that, why not be on top of the news and understand what happens? Let's say we don't understand what happened. Some news comes out and you're like, what is even this I'm looking at? Chat GPT will tell you the exact words, or you can put it in the chat. But Chat GPT will tell you if this is bullish, if it's going to go up or expected, or if it's going down in a sense, or if it's bearish, right? Chat GPT probably love and hate me the amount of times I use it. So the news we need to stay on top of, right? We have to be on our P's and Q's, right? Where does a red candle start, ladies and gentlemen?
The top.
Everyone agree? Everyone agree?
Yes, the top.
Yes. Perfect. Right? So I know them. So in the group, I call them put pirates. They love their puts. So when price, right, it starts to get exhausted. This is what I think of it as, right? The buyers ran out of money. So they were buying. The boys ran out of money. Now we have price drop, right? We have sell-offs. Reactions, right? News comes out, we have a reaction, right? I have a question for everyone. If gold is going up, it's going up crazy, going up crazy. Is that good for the market or bad for the market?
Bad.
What was that?
Bad.
Bad.
Bad? Everyone agree? But I agree or don't agree. Oh, y'all are in there. But I agree or don't agree in Zoom for me.
You said
If
the
it
bulls are going up.
If gold.
I think it just
Gold is
depends.
going up.
Is you a put pirate or no?
You a minute.
That's what you gotta ask yourself.
Is it good for the market for it to go higher or down?
Not generally though, no.
Right? So in old ages, in the past, what they used to do is trade gold, right? Gold held its value. So during like times of COVID and different times, or even way back, or wars even, instead of keeping their money in the market, stock market, investors or people will put their money into gold, things that can be traded, right? Gold it was bartered, right? It was used to trade for sheep, wheat, food, everything, right? So gold, if gold is going up, it shows exactly what Kanisha's saying, fear in the market. Now, how about this? If Bitcoin is going up, is that good or bad? So Bitcoin spikes up crazy. Is it good or bad for the market?
I would say
Anyone
good.
answer that?
Good.
Who else? Who else? If
That's
Bit-
good.
okay. Bitcoin going up is good. The reason why, I'm going to show an example. Might be a bad example, but don't hate me. All right. So it was before Trump was in office. It was a weekend. It was quiet. Trump was at a rally. A sniper. Boom. They almost shot him. The market, mind you, the market was closed. The stock market is closed, so no one can buy or sell their shares in the market, right? Bitcoin, after this occurred, so came on the news, boom, 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 social media, came out, he was fine. They rushed him out. All he had was a graze on his ear. He was good. When this was occurring, Bitcoin was going up. It was flying up. Crypto was going up, flying up. Now, why? Now, the reason why Bitcoin was going up, number one, the stock market was closed. So where can investors put their money or take their money out? Crypto. It's 24 hours, 7 days a week. Now, the reason Bitcoin was going up, if a president or someone that's trying to become president, right? If they almost get assassinated, this is just literally off of, if you Google it, if the president almost gets assassinated, what are the stats of them becoming president? The stats are high, which is crazy. So what did we get? He became president. Now, when Bitcoin went up, it was just based off of Trump more likely becoming president. When it comes to trading, you have to think outside of the box. When it comes to trading, you have to think outside of the box. So understanding what can move the market and what can move it up or what can move it down. So that Monday, the market was up. Why? Or what was the signal? Bitcoin. Bitcoin was the correlation of showing positive sentiment in the market. If anyone was there, the market was beautiful that Monday. Beautiful. Just off of that. So just using Bitcoin as an example of knowing, hey, the market is in a good condition or a good environment for Bitcoin to go up and the market. So certain news that comes out can affect Bitcoin and the market as a whole, right? Now, let's say it's some news crypto related. This is my favorite. So with the cryptos, I've been murdering MSTR. Murdering. I'm saying like 200 to 3 bands, 100 to, right? Why can I capitalize on MSTR? Knowing what companies that we're trading is important. So the background on MSTR is they buy Bitcoin with 0 interest loans, right? Pay it back, sell shares probably, pay it back, and now they buy more Bitcoin. It's like an endless cycle. So they continue to do this. The stock continues to go up. So when Bitcoin is going up, it's beneficial for MSTR. Now, let's say news comes out and it's crypto related. Regulations, they're saying, hey, we're going to add crypto to 401ks. different things like that will push crypto, right? When Coinbase got added to the S&P 500, push Coinbase, right? When different things occur crypto related, it pushes crypto related stocks. That sector moves. So what do? We look to see how we can capitalize off of MSTR, Aura, Riot, CleanSpark, CLSK, knowing how you can capitalize just based off of news. Every day there's going to be a news. So if anytime anyone says, dang, I missed out on this, or dang, I sold too soon, I say the same thing every time. There's going to be more. Why? There's going to be news later today, tomorrow, the next day, Monday, Tuesday, Wednesday. There's going to be news. What do we have to do? Just be ready. Don't just be throwing out trades all willy-nilly just because it's 9:32 and you need to find a trade. Let the trade come to you. Sometimes I wait. Look to see what sector's moving. Look to see what stocks are booming. Why? Because in trading, it's probably like 90% patience, waiting for the opportunity, 10% actually executing. So 90% of waiting for the trade to actually come up for the opportunity, waiting, then click a button to enter the trade and then get out. Wait to patiently get out. What up, shout out? So understanding patience is going to be key in the market. Understanding when you need to be patient and when you need to cut it and call it a day. There's a question that I always get. When should I sell if it's not working out, the trade, right? I'll say one thing, right? I'll say a couple things, honestly, because and I'll see if a couple will jump on, a few of them will jump on to say something. When it comes to cutting your trade, so let's say the trade, you jump in, boom, you're at 10%, first minute, and then all of a sudden the trade's down 30%. The standard that you're going to hear on YouTube and for most traders is cut it at 30%. Why? That's so that you're not losing 100%. So if you spend $100 on a trade, are you going to lose the $100? Are you trying to lose the $100? No. So risk management, everyone is going to have a different risk management. Maybe 40, 50, some people say 50. Now, mind you, I'll say this. I've done trades live where the trade goes down 50%, down 70%. But on charts, price is maintaining. What do I mean? It has a support. It's maintaining a support. If price maintains my support, for example, let's say over here, right? Let's say price maintained my support. It went up crazy, and then maintained this area. My stop would be below. So I'm going to say, hey, if price goes below here, right? Now, our contracts, depending on what you're trading, if it's 0 DTEs, a pullback can be a crazy pullback. I'm sure you probably seen a minus 80% and then it go up 500%. You'd be like, damn, I sold minus 50%, right? Because of the time, because of the implied volatility, the IV. When you have time on your contracts, you can sit through a pullback. You can allow price to play out as you expect it, right? You see these charts? I ain't gonna lie, this is beautiful. Boy, look at this, look at this, right? So price held, we got our support. Why am I calling this our support? Price bounced here, went up, maintained, and then tested that same area again. So this is significant. This is an area that's very significant, right? I'm gonna move back. Price at one point broke out right here also, right? Continued its breakout here as well. So while you're trading, you're gonna have your key areas or key levels that you will need to go ahead and mark down, right? If price is struggling to break above or below certain areas, like the high, right? The pre-market high, the pre-market low, the previous week high, the previous week low. For me, I trade on the 1 minute. So as I'm trading, you'll see lines all day. Why? There's areas where price struggle to get above, or areas where price struggle to get below, or maybe consolidated in these areas. These are important. So later on, when price gets back to these areas, I can see, all right, is it struggling? Is it gonna actually get past? Is it gonna be a resistance? Can it break through and continue the trend, or is it gonna reject? Right? So as I'm trading, I'm using these same levels. Hey, can price get below? It wicked all the way down here, came right back up. Would I get out of my call here? Right? If I'm in a long call just because it wicked down? No. Let's say if I had something 2 weeks out, 3 weeks out, I got some time. Then look, price continues, right? Any questions right now, guys? Any questions right now? No one? We got 42 people on here. No questions? How's boot camp so far? Everyone just put however you feel in Zoom really quickly, how you feel boot camp is. Just how we going so far. So
I
far we
think
got
it's
an hour and a half.
cool. I was a little bit late. I was at the barbershop and I'm driving home listening.
No worries. It's all recorded, so you'll be able to go back to the beginning and then be able to see whatever pieces that you missed out on also.
Perfect.
Alex, no worries. I got you. We're going over fake breakouts on the next soon, brother. Just remind me if you don't mind. I'm gonna add that. I have that already in there, but I gotta make sure. Fake breakouts, fake breakouts. It should be on the second or the third day. I'm gonna take a second and let me see. Ben 10 per. If Dimples is still on, you guys want to give any insight for the squad? Any insight at all? Any tips, tricks?
Yeah, but y'all gonna have to give me a few minutes because I'm in the line at the dropstick liquor store and they be yelling and stuff. So
You're good. All right. Let's see. Shout out. I'm gonna send. There's a recording for you. I got you. No worries, brother. GQ, you said, can we pull up Apple on the daily? I gotta see. We get a continue. Bro, that Apple move today was crazy. What's funny is I normally say I hate trading Apple because it don't always do that. It don't always trade like that, right? Here's one thing I would say. If for the stock that you choose, that's your favorite stock that you always choose over and over, there's normally at least like 2 to 3 opportunities each and every week that you can catch on the stock. So maybe it's on the upside, the downside, but at least 2 to 3 times a week that you can catch on your stock. If there is not, you need a new stock. So like stocks like AT&T, I hate trading that because it don't really move. It's just sitting in the same spot over and over, month after month, day after day. All right. So we went over sector rotation, strike price. Ooh, I like that one actually. So I'll actually go over strike price while I'm waiting for per, right? So how to choose my strike price? What am I choosing? How am I supposed to choose my strike price? One thing that a lot of traders do lose out in money is because of their strike price. I'm not gonna lie, I learned this early because it made sense, right? if I'm gonna trade, let's say SPY going up or going down, the strike price is going to be important. The stock is gonna move. It's gonna go up, it's gonna go down, no matter what. But the strike price is gonna be the most important. I want everyone to write down one thing that I need to make sure you look at on these contracts. Every time you look at a contract, write down volume. Not just on the stock, on the actual contracts themselves. Write it on your notes and then write it in Zoom for me, please, just so I know you still here with me. Volume. Volume on the actual contract. You can just put volume, but in your notes, write down volume on the actual contract that you're choosing to trade. I'm going to give you a tip that's actually pretty lit. So when you're looking at contracts, so let's say you're looking at a stock that's around 190. So just say an example, 190, right? The strike prices that are 195, 200, 205, 210, 215, 220, shit, even probably the 250s will have the most volumes. Don't ask me why, they just do. The 197.50, the 102.50, the 107.50 normally has less volume compared to that 200, 205, 210. So if you want, you could take a look on an options chain to see if it makes sense or if you can actually see it. But mostly you'll see volume on those contracts that have like the 5 or the 0 at the end, right? It's easier to get in and get out when there is volume on your contracts. So let's say if I get into a trade, it's like, think about eBay. If I sell something on eBay and no one's buying it, it's going to be hard to sell it. I might have to lower the price in order for me to sell it. Same concept when it comes to options. Does that make sense? I mean, yes, no. Let me know you're still here. Ben 10, what's your question, Queen?
Okay, it's gonna sound a little dumb, right? So bear with
Okay, hold on. There's no dumb questions when it comes to you learning and understanding something. When I was in school, I forgot what teacher it was. I think it was like Miss Brown or something. She said, there's never a dumb question. It's only a question you don't ask. All right, go ahead.
So is there a way for me to see like volume coming in on TradingView, or does that like directly correlate with the RSI?
Volume coming, like the actual contract amounts, how many are
Yeah.
coming in? So that would be flow. So
Okay.
flow would show you the contracts, that the amount of contracts and the value of them. So unusual flow is, the reason it's used is it's like, why is somebody putting in $1 million into this? Or why is somebody putting in $2 million into these contracts? So that helps with at least recognizing where big money can be potentially putting their money.
Can I say something else too?
Oh yeah.
Like to volume, not just like flow wise. I like to look at unusual options flow, but not like, I mean, not unusual options flow, unusual options activity, to see, if, call or put ratio, if the calls are, higher than they were last week, or if more people are buying puts, or if people are buying, like, how do I explain it? Longer out calls. So with unusual options activity, it's a little hard. I never really tried to explain to anybody before, but if I'm not making sense, just like let me know. So it's basically like telling you what the most active contracts are based on what their usual volume is like. So when their volume gets anything out of the usual range, whether it increases or decreases, like it'll let you know not necessarily where big money is going, probably mainly retail, but it gives you kind of an idea of the sentiment of the market. Like for instance, with a lot of the earnings plays that I was looking at this week, I was looking at the options for like the options activity to see, you know, if the call or put ratio was higher, if they were buying calls for the week of earnings, or if a lot of people were buying calls for the week after earnings, because that would tell me if they were expecting to move the big move to be closer to earnings or more like of a longer out kind of move. So looking at volume on flow, well as like on the options chain helps as well.
So this is what I would say about flow. So you can use it to your advantage, but it can also be misinterpreted because it could be someone putting 4 million on calls and then they put 1 million on puts. You see the million on puts and you're like, oh shit, they're in puts. And you didn't see the full ratio on what's going on. So I would say just still look to see what you interpret on what's going on to the market, but use that as like a kind of like in a sense, like a not a confirmation, but in a sense, kind of an idea of what can potentially be going on in the market.
Yeah, hold on. Let me add to this a little bit.
Oh, Trey, I forgot my boy. Go ahead.
I'm Trey too. Oh my God.
Yeah,
It's
so
a family
Benicia,
reunion.
so one thing I would say as well, especially on the stocks you trade the most. So like if it's a Tesla or even Lilly or whatever, you know, you're trading the most. Like Nico's been saying, look at that 5, 10, 15, sometimes even $20 out contracts. Look at the open interest, look at the volume. And what I would task everybody here is on Monday, on a lot of these stocks you trade at 9:30, look to see if the call contracts are costing more at the money as compared to the put contracts. That's going to kind of give you an idea of what the market or the bookmakers are thinking for that week. So we know like Lilly just was down $136 this week. So now we got a big range for Lilly for next week of what it can do. So now we have a much bigger true range. So it could bounce all the way up those $100, or it could keep going down. Of course, you know, due to support and resistance, I know this is a little more out as far as that with just talking contracts, but that's just something to watch. Even like Tesla went to 330.
Loved
And
it.
when you start charting Tesla, we start knowing the next levels after that. It went to 335. We know after 335, hey, really the next big resistance is like 344. So now when Tesla starts Monday 9:30 in the morning, our calls way ahead of puts at the money. This is going to kind of let you know what kind of week Tesla is going to have. Then on top of that, Benicia, you're able to see, and I don't know if you've been adding it to your trading. Look at those monthly candles and look at those weekly candles. That's going to let you know how far that stock can go, and also help what Niiko was saying earlier, getting the right strike price. So if I'm buying a $300, contract, and the range it can only go up to 320, why am I buying a 350 contract? I'm not gonna make no money. So that's something also to like look at. But that volume and that open interest is gonna let you know every time we're looking at the options chain. But if you do pay for like an unusual wells or cheddar flow, you can see where the calls or like where the calls or puts are outweighing for that stock for that week. So that could kind of help you as well. But start monitoring the cost of the contracts as well, and then looking at the open interest and volume. But what the unusual wells and those type of platforms will do, they're going to show you when they enter the trade and then when they exit the trade. So you can see exactly when they bought and exactly when they got out. Because a bunch of the wells, they were loading Apple like Wednesday and Tuesday, and I'm like, dang, Apple is kind of like, I'm not gonna lie. Before the news even came out, I'm like, why is Apple so strong? It was just under $200, and it's starting to just hold the market up. Something is coming, and then boom, the news came, and it's up for two days in a row.
Back to back to back to back.
So sometimes the premiums will tell you that, but then also Monday they're gonna kind of let you know why are calls so much more than these puts right now, and then news can come out, and then of course everything can change. So that's just something I look forward to.
Dang, my dog giving them super gems. Now
I'm
I
not
gotta.
gonna lie to he's right about the weekly and the monthly, because what I do is like, so if I'm charting something at the beginning or the end of the month, I go to the monthly time frame to see where the support and resistance is for the previous month or like for the end of the month that we're in, and I color code those support and resistance lines, so that way if I'm looking at the 1 minute, the 5 minute, the 15, I know like, okay, we're approaching the weekly or the monthly support or resistance here. I should be watching for something. It's not just a regular support or resistance line. Those sometimes hold more weight. So when you're doing your top-down analysis, it doesn't hurt to get a broader picture, especially if you're swinging.
Yeah, see, I usually do, I only ever day trade. Yeah, will ever very rarely see me get in a swing. So I usually just look at the 5 minute, the 15, and the 30. Now there are some times though where I'll look at like the 4 hour, but I just realized I've never looked at the weekly chart. Like I'm looking at my trading view and I just added the weekly on here.
Yeah.
The
Even
weekly is where it's at.
when I first chart a stock, I always go I'm not even gonna lie, when I first chart a stock, I go all the way from like 12 months. But I'm not gonna mark every single support and resistance, only the major most recent ones on like if I go all the way out 12 months or 6 months. But
So I'm
yeah,
just
I be looking at everything.
so on the screen I'm showing you flow, right? So this is recognizing what's going on in the market. Now, when it comes to big money, so let's say you see an unusual amount of money, let's say $2.84 million, something like that, right? But this is $861 away, date to expiration. So they were expecting a drop. Now, mind you, remember this. Let's say big money buys contracts that expire in 2026, 2027. That doesn't mean that they're staying into the trade until that time. They can still be treating the trade just like we are, right? Buying in, getting out, right? We see the move, we capitalize and get out. Why are they doing this? Remember, the contracts that expire the same day have to worry about time decay. So as the time goes by, the day goes by, the contract is losing money and can outweigh the value of the IV. So you're losing money, and then once IV starts to go down, then you're losing money in because of both factors, right? But if you're buying contracts that are far out, you don't have to worry about time decay. All you have to do is worry about the movement of the actual stock itself. So that's why they're buying contracts that are 2027, 2026, and capitalizing on a move that could be 5 minutes, 10 minutes, a day, half the day, 30 minutes, 40 minutes. So don't forget that also. So you want to be up to date on the flow. Don't look at something from months ago and then you're like, oh, they were loading up, but then the move happened the next day after that occurred. And you're a week late, 2 weeks late, a month late. So don't forget that. Any questions, guys? Don't hesitate to ask questions. We're here to help. There's no dumb questions, right? We all started at some point.
I just
Go
want to
ahead.
say thank you
Oh,
for the
no problem.
help, Trey and Perp and Niiko, of course.
Of course.
No problem at all.
Thank y'all too, because y'all be helping me too. Shit.
Yeah, I
Gotcha.
think one of the main things I can say for everybody in the chat or everybody who's here, you want to trade stocks that move. So go to finviz.com and pull up the S&P, and you can see what has been moving throughout the year so far on finviz.com. And you're able to see what sectors have been moving as well. Now, granted, there are some stocks that have been having some new IPOs that are not technically in the S&P yet, but they're moving. So, MSTRs and all these other ones, they're not in there yet. The Circles of the world, the Core Weaves of the world, they're not in there yet, but it's possible for them to get in there soon. So those are some things to watch out for, and also new news events to watch out for. Same thing like Robinhood. I know people trade on Robinhood. Once Hood gets added to the S&P, that thing may go to 150, 200. Like, it may go crazy.
Or do a stock split soon too.
That too as
Yeah,
well.
we're
So
waiting on
that's something to watch out for. So again, you want to find something that is going to move that $5-10 in a day, or that has the possibility to do that. And you're going to only know that by looking at those monthly and weekly candles to see, hey, this stock really only moved $3 the last 3 weeks. Why am I trying to trade this?
Can I
Until
say something on that, Trey?
What happened?
Can I say something on that?
Of course.
So you see how he's mentioning how far a stock can move within a week, within a month. Remember that when you're choosing your strike price as well, right? So if I know a stock can move $5 in a day, $10 in a day, why am I choosing the strike price that's $40, $50 away from where price is? That expires in 2 days, a day, right? So choosing the right strike price will matter every time. So if it doesn't look like it can get there, other money's not going to buy it. So if it doesn't look like it can actually make it to the strike or past it, don't buy it. Or if it's expensive and you're like, dang, I want to get in, but I got to go further out the money, there's another stock that you can trade, I promise. Don't force a trade or try to get into a stock because, oh, I got a budget of 200, my port's at 1,000. Let me try and get into Netflix on a Monday. If it's not moving, you're just sitting in a trade and could possibly losing money, right? If the stock doesn't move within that short period of time, you're losing money. So you want to make sure, or let's say if you're choosing that Netflix and you spend 200, you got $150 strike away, 200 strike away, 300 strike away, just so you can get in the trade. That don't make sense. So set yourself up to where you're choosing stocks that fit what you can trade in your portfolio also. Not every stock you can trade. Like certain stocks, I'm not going to trade, right? Certain things you shouldn't be trading, right? If MSTR is expensive, find an alternative. If I say crypto stocks are moving, you don't have to trade MSTR. Maybe coin is moving and the contract's a little cheaper. Maybe MSTY is moving and you're buying at the money strikes. If you're buying something that is low cost, right? It's a cheap stock under $20, $30, $40. Don't choose a strike price that's $5 away, $10 away. It don't make sense. The stock's only $40. It's only $20. It only moves 50 cents in a day, 40 cents in a day, $1 in a day. Why is your strike $3 away, right? And the expiration's a week away, 2 weeks away. So when you're choosing your strike, make sure it makes sense. So look to see what it has done before so that you can decide as well. How am I able to choose the right Tesla strike prices? I'm trading the same stock over and over and over, understanding how far the stock can go up, understanding how they trade the stock. If it goes down at a certain point, the news lasts for so long and then they buy it up. Like it was the new kid on the block. So it's just understanding repetition, understanding how to actually choose the right strike. Thank you as well, Bella. I thought there was a need. Choosing the right strike price on your contracts to be able to capitalize. You can understand the stock is going up, but if you don't choose the right strike price, it don't make sense. Go ahead, Trey.
And then also what I would say to that, so with what we're talking about like right now is just choosing the right strike price, understanding where the stock can go, and and those type things, but also understanding the seasonality of the stock helps as well. So that's with the news and the fundamentals. So I would advise everybody that's in here, type into Google, Chat GPT, whatever you use, Grok. How does this company make money? So you can actually see the companies you're trading, how they actually are making money. Then you know when certain news drops, how it's going to affect it. And even when it comes to stocks getting upgraded or downgraded, like Oracle, I was just watching the call. Oracle was upgraded like 3 times this week. The stock didn't move. As an example. So upgrades are not moving that stock. But now we look at the seasonality right now. That type of stock has a lot of competition. And I actually use Oracle every day and at my job currently. So I'm actually using that product and it's not moving. Like the stock price is not moving right now. And they have good news associated with them right now. So also too, remember, it's the summertime. Stocks that we don't trade as much, the hotels, the cruise lines, even the banks, they're loading up now. Because by the time December comes and then they have to go do that Q1 in
Quarter
2026. Oh yeah, quarter four, I'm sorry. Their numbers are going to be crazy because that's when they normally make the most money. That's where you may have a boost in a Lulu or a Ulta Beauty or all these other stocks that we're not trading as
Or
much,
Disney.
or Elf. All like it's so much stuff out there. Also, too, the summer just happened. Disney, once they report the next time, they're gonna have those summer numbers in there. And then now they just, they just, did the NFL merge and all that stuff. So that would be a stock to watch, even though I think they should split up their company. But just understanding the seasonality of stocks, car company, we trade Tesla. This is when they're doing all their summer deals. This is when they're doing all their back to school type stuff. They're trying to get people to buy these cars, even though it's hard with the interest rates. But understanding, hey, this is how this is how they make money, and this is what causes the stock to go up or down. Like Meta, they smashed earnings, but they smashed earnings in the right way that caused the stock to go up 100 plus. You know what I'm saying? So just understand what makes those stocks go up and down, and it will save you a lot of time when those news events are posted. Because I know Niiko is really big on the news as well. I'm a news trader as well. A part of me is a news trader who still do other stuff too, but that helps.
Everyone take a screenshot of my background that I have right now. This will help you. This is times that you should be trading. This tells you about the market. The mornings, some people love the mornings. Some traders will say, don't trade the mornings. Some people will say, trade it. For me, I know that we can make the most during volatility. So I say the first 50 minutes, we get the most volatility, we get the most movement. So from 9:30 to about 10:20, we get the most action normally, right? So you'll normally scroll through all the different stocks and you'll see a whole bunch of different stocks moving with opportunity, action, breakouts, breakdowns, falling knives, right? So we can capitalize within those times. Then we got midday, where it's boring. We're relaxing. We're waiting for a catalyst to come out for the market to start moving. We're doing something. We're waiting for Trump to say something. Then towards the end of the day, we got power hour or sour hour, right? Lately, it's been like sour 45 minutes and then power 15 minutes, where the market push, where that volume comes back. So the first 50 minutes and that last hour is when we get normally the most volume, guys. So understanding where your opportunities for you to capitalize. You don't have to be in the market all day long. I'll say it again. You do not have to be in the market all day long. You can get your money. You can get your money first 30 minutes, first 50 minutes, and then go about your day. Literally. But I know greed comes out sometimes, but then there's also understanding opportunities are also later on in the day. So making sure that you can capitalize on when you can make money. If there's a catalyst, so news, something's moving. There's always some news somewhere. It's a partnership, an upgrade, a downgrade, a company going bankrupt, something, right? So just capitalizing on what is available and what is there. Any questions right now, guys? Everyone got their screenshot? Yeah, no. Trey is my good friend that as I was learning the market, trading in the market, we trade back to back. Literally, I would find something. I'd be like, yo, Trey, I found this stock, some nice news. And he'd be like, bro, I found the same shit. Then me and him, when we traded, we would trade on the 1 minute. The 1 minute warriors in the market. Why? Let's say if I'm trading on the 10 minutes or the 5 minutes. By the time you get in, because you were waiting for your 10-minute candle to form, I was already in 9 candles ago, or 8 candles ago, 7 candles ago, catching the move. Now to trade on the 1 minute, it took time, repetition, over and over and over. So that means me automatically knowing 10 candles is a 10-minute candle, 20 candles, 20 minutes, 30 candles, 30 minutes. So just I'm pretty good with just understanding where price is, right? So, and then combining it with price action. Oh, Trey is the AMD king. Also, yes, that boy murders AMD.
You know, I used to like the 1 minute, but then I noticed once I started using the Ripster Clouds, I felt like I had a much more clear vision on the bigger time frames.
No, so I'll say this, it works perfect on both because you're able to be in your position much longer and see where direction is going. So you're able to, so just like I was saying, using the Ripster's Cloud as a support and resistance, if you're using it on the 5, 10, 15 minutes, you can stay longer in your trade and understand where direction is going. Versus on the 1 minute, I'm watching it play out, but I could be shooken out much quicker, or I could get in and it could be just a break and then a retest and then it goes up. So with the 15-minute or even the 4 hour, it allows you to see what's going on, what's the bigger picture. And if it breaks above or below, then you have a bigger time frame to depend on.
Yeah, so Ripster himself actually uses it on the 10-minute. So if you want to use it as he's using it, you could use it on the 10-minute. To me, I found success 1 minute, 5 minute, 10-minute, 15 minute. It really doesn't matter as much as long as you know your levels. That's the main thing. You know where price can go. You hopefully got a really good entry, and you could just let the runners run at that point, and hopefully news stays in your favor, where you could catch those 400, 500, 600 1,000% trades. So that's kind of like the main thing there.
I got a question for everyone. I'm gonna end this here, and then we got homework also. I'm gonna let if anyone want to add on to anything before we close out. I want everyone to put in the Zoom chat what their percentage is if the trade isn't working in their favor, where they're like, yo, I'm done. I'm calling it quits. This is the final amount. So if you had $100, you got into a trade, it wasn't working in your direction. Maybe some news came out. So now your whole plan kind of changed up. What is that percent that you're like, all right, I'm gone? Put it in Zoom chat for me, please. Everyone. Everyone, what is your percent? If you had $100 in a trade and it was not going in your favor, going in your direction, where are you gonna cut it and say, I'm done? I gotta go about my business. This one wasn't the one. Nah, Bella, I wanna hear, I wanna see, I gotta know. This is important. We gotta be true to ourselves when it comes to this, because this is our money, this is our bread. How do we wanna make 1 million? How do we wanna make 500,000, 20,000, 10,000, 500? I'm seeing 30 minus 100% is crazy, minus 99%. But I'm seeing a lot of minus 20 and 30%, 15, 30, 40, 20. This is a real genuine question. Whew. Well, 20%, 30%. Lenny said minus 99%. Let it go to $1. You ain't even be able to take your dollar. It's $100. I'm taking the L on the whole thing. Oh my gosh, y'all emphasizing it, y'all condoning this. Oh my God, I thought we were at 50. All right, so everyone got theirs in? Too rich for my blood bourbon. Y'all over here donating. No, don't buy more when you're down. All right, so this is what I'm gonna say. All right, so I'm gonna clarify a few things. You paying paying the market rent, mortgage, the whole nine. All right, so this is what I'm gonna say, right? Have a number that still in your head have where if the trade, let's say some news comes out and you're like, yo, this ain't the one. Right? Have it at a percent that is not at 100%. Real deal, real talk, right? When you get into a trade, expect 0, but don't sell at 0, if you know what I mean. Don't wait until it goes all the way to $2 when you're trying to build your portfolio up, right? Let's say you got $500 in your portfolio, you spend $100 on a trade. Are you gonna really let it go to $1? Right? That wouldn't make sense, especially if you're building the portfolio up. So make sure you have something in place so that if the trade doesn't work out, you can continue with more opportunities. You can fight more in the market, right? Sizing, so the position sizing in your trades. Let's say one trade you spend $100. Then the next trade you spend 200. The first trade didn't work out, but you said, damn, I want to try and get my money back plus some more. So you spend 200 on this trade. This trade doesn't work out, then that percentage that you said I'm going to cut at 20, 30 changes, right? So understanding, managing how you're actually putting in your trades, what you're spending your trades on, your size. Don't go from 100 to 200 to 300 to 400 to 500. That doesn't make sense. For me, what I'll do, let's say the trade worked in my favor, right? Let's say I make 100% on the trade. My next trade is not going to be, let's say I spent 200 and I made 200. My next trade is not going to be spending 400 on my next trade, right? I'll spend 200. Why? That's what I initially spent on the trade I just got 100% on. Number two, if this trade doesn't work out, I'm not donating it back all the way into the market. I'm not losing it all in one go. Right? So making sure that you can continue to last in the market. Does that make sense, everyone?
Yeah.
And notice,
Hey,
go ahead.
Nico, would you consider like taking what you initially put in the market, like after you make like that 100% or whatever percentage that you make,
You said take it out of the market?
taking what you initially put in, like say for instance you paid $50 for a contract and you made like 150%, which is just $100. You pretty much pay yourself by taking what you put in, right?
So yeah, so basically if I spent 50 on that trade and I made 150 on that trade, I'm putting 50 straight to the side, I'm not touching it. I'm putting 100 straight to the side, I'm not touching it, to be honest. If I made 150%, shit, I'm probably only spend 50 just to do the same thing. If it doesn't work out, I have more opportunities versus let me try and go bigger and go home, or go home, literally. So let's say if I do $50 in a trade and I make $100, spend 50 on the next trade. So now if that trade doesn't work out, and let's say, God forbid, you couldn't even save the trade, you still have that 100 from that first trade that you took. You survive for another day, you're still up no matter what. But the next trade, if you go in with 100 and that trade doesn't work out, now you're losing your profits plus potentially more. You're taking a step forward and then 2 steps back. So in order for you to be profitable and continue to let the portfolio grow, you have to compound, but you have to manage it accordingly, correctly. Risking at the right times and knowing when not to risk. I call it Freaky Fridays for a reason. It can get crazy. On Fridays, I literally call it Freaky Fridays because you could have a trade that goes from $50 to $1 or $50 to $500. One or the other. Right? And price moves quick. If you're trading a 0 DTE, price moves quick. If you're someone that doesn't want to be in the market all day long, that's perfect. You can put contracts that are a month out, 2 months, 3 months, a year out. So now when the market goes down, you don't got to stare at it, biting your nails. Like, damn, what's going to happen? As long as it is a good company, really do the research and see if it is a good company. If in 2 years, 3, 5, 10 years from now, you expect it to continue, if you see it continuing to adapt to the market, it's adding AI. Every company that you saw added AI, you've seen it go up, right? So as that company continues to adapt to what's going on in the market, that's perfect. It'll be there long term. Crypto, we see crypto companies joining the stock market and flying up crazy. I caught CoreWeave beautifully, or Circle beautifully. Why? Just knowing what sector it is in and what it makes money from, what it does, right? So as long as we know, just like Trey was saying, know what the company's making money from. Why is that important? I know Netflix. If their subscriptions go down, that's not good. The stock will end up going down. If they raise their subscriptions $1, the stock's going to go up. Why? They make money from subscriptions. If they have 1 million subscribers, that's $12 million extra they're making by doing nothing extra. So just understanding how companies make money and how you can capitalize. But any questions before we end it here, y'all?
Nah, no more questions. I got a lot of notes.
Hey,
Derek had a question.
Derek, what's up, brother?
He
You play.
he said he wanted to know if we were gonna be
Going over charting.
charting.
Oh yeah.
This man forgot his own question.
I got you. You see?
Yeah.
I got you. We're going over it for tomorrow. And then the last day will be lit as well. How was class, y'all? How was class?
Wonderful.
Lit. So y'all, I'm horrible at buys. But y'all have a wonderful night, a great weekend. If you gonna turn up, go ahead and turn up. But y'all, peace, blessings, blessings.